In this video, we're going to look at the concepts of sales and purchase orders. There are four types of orders. Sales orders and sales credits are related to customers, while purchase orders and purchase credits are related to suppliers, which are called vendors on US accounts. Unlike many systems, there's no concept of a provisional order or quote. In Brightpearl, this is simply an order of status quote, which you'd exclude from reports or automated processing rules if you wanted to. You can configure a set of order statuses, which lets you manage workflows specific to your business. There are four sets of order statuses, allowing separate statuses for sales, credits, purchases, and purchase credits. Here's a typical sales order workflow. B2B orders would start as a draft, and then progress to a quote when you send it to the customer. When they confirm, it would progress to new order. B2C orders, downloaded from a sales channel, would arrive on the new order status. When you start working with the order, you'd move it to processing. If there are issues, you'd move it across to on hold. You can use this status in conjunction with a custom field or order notes to give more detail, perhaps a payment issue or items are out of stock. And then, when the order is fully shipped and invoiced, you mark it as completed. Every order at every stage will have four system statuses: payment status, allocation status, fulfillment status, and shipment status. Order status shouldn't be used when there's already a system-driven status, or where there's another field which could be used to identify the order, such as a sales channel. Here's an example set of order statuses for purchase orders. You build the order, adding items, and then send it to the supplier to mark it as placed. You then receive items, and then later, when you receive the invoice, it's marked as closed and accounting entries are made. Here's how orders are made up. We've already looked at the order type and the order status. The order warehouse is used for allocating inventory, if you want to reserve items for the sale until it's shipped. The warehouse on the order does not have to be the warehouse that you eventually fulfill from, since you can use a different warehouse for each shipment. I'll come back to fulfillment later in this video. In a similar way, the shipping method on the order is a recommendation, usually from the sales channel, and can be changed on a per shipment basis. The price list on the order determines which prices are used when items are added. When orders are downloaded from a sales channel, the channel's prices are used. The cost price for the order is used for estimating the expected profit. The actual costs come from the asset value of the actual inventory which is shipped. Each order has three addresses: a default address, a billing address, and a delivery address. There are a few other data points which you can use on orders, including custom fields, seasons, and team or owner. Custom fields could be things like gift messages or return reasons on a sales credit. One set of custom fields is used for sales and sales credits, and another set of custom fields is used for purchases and purchase credits. The channel is set automatically if the sale is downloaded from a marketplace, e-commerce store, or POS. Any subsequent accounting transactions for the order will use the channel, allowing financial reports by sales channel. Lead source and project, which is sometimes called analysis code, also persist into the accounting for the order. If a customer has a lead source, then any order for that customer will inherit the lead source. If the order has a season, then only items with the same season can be added to the order in back office. Sales channels don't use the season. The team would be used to restrict visibility of some orders to some people. Have a look at the users training course or help articles for more information. The owner of the order is often used for sales commission calculation, but could equally be used to divide responsibilities within a buying team on the purchase side of things. Before we go on to payments, let's look at the contact associated with an order. The contact record has to be created first, and then an order is created for them, except in POS where you can do it the other way around. When new customers are encountered on sales downloaded from online channels, in other words, one with an email address not yet in your database, the customer is automatically created. When you create an order for a customer or supplier, the following fields are inherited from the contact: price list, currency, name and address, and lead source. The currency of an order can't be changed once it's created, but all the other fields can be changed. Tax code is separate here. An order doesn't have a tax code, but if a customer or supplier has a tax code set, then every line added to that order will use the contact's tax code. In Brightpearl Backoffice, the customer can be changed on sales orders. allowing you to build generic quotes which are then copied and then the contact changed. Sales can be copied to other sales or copied to sales credits, which are used for customer returns. Sales can be copied to purchase orders, which can either be shipped to your warehouse or direct to customer as a dropship purchase order. Purchase orders can be copied to another order for the same or different supplier. And finally, multiple sales can be used to create a purchase order based on the items on those sales, using availability of stock if you need. An order consists of lines, which can either be stock items, service items, or a bundle. Each line has information about the item: an accounting code for revenue and expense tracking, a tax code for tax reporting, and prices. The information on the lines goes directly into accounting when a sale is invoiced or a purchase invoice is received against a purchase order. There are some dates on the order too. The tax date and payment date are used for customer and supplier invoices, and the delivery date can be used for scheduling upcoming sales or planning incoming purchase orders. Now we'll take a look at payments. Orders are marked as paid by the existence of something called a customer payment for sales and supplier payment for purchases. Collectively, they're known as order payments. An order payment is either of type receipt from a customer, or a payment to a supplier or a customer refund, an authorization, or a capture. Multiple order payments can be created for a single order. Order payments are always in the same currency as the order. An order payment has a payment method, which is connected to one or more bank accounts, which determines where the funds are moved from or to. A bank account in this context is a Brightpearl account code. It's not a real-world bank account. Creating or deleting an order payment will update the order payment status. Creating an order payment will not actually transfer money from a customer's credit card or bank account. It's only used to reflect the fact that this has already happened in the real world. You can, however, use a payment integration which will authorize the customer's credit card, and if the card is approved, it will create an order payment automatically. Brightpearl then takes care of the accounting transactions required. Great, so that's the order side of things covered. Now we'll move on to allocation and fulfillment for sales. The first thing you might want to do is reserve inventory for a sales order as soon as it's created. You won't ship the goods for a while, but you want to reduce your available inventory immediately so you don't sell it on a different channel. To allow this to happen, Brightpearl uses the concept of on-hand inventory. The on-hand inventory is the quantity you have in stock, less the quantity allocated to sales orders. Inventory can be allocated manually for a single item, a whole order row, or a whole order, but you can only allocate inventory you have available. A sales order has one of the following allocation statuses. It's either not required, in other words it's got no stock items, it's not allocated, part allocated, or all allocated. And of course you can filter reports by order allocation status. The next stage is fulfillment. When an order needs to be shipped to a customer, we fulfill it. This is the process of creating either a goods out note or a dropship purchase order. An order, and in fact even an order line, could be part fulfilled by goods out note and part fulfilled by dropship purchase order if you wanted. A goods out note contains items from one warehouse. Creating a goods out note for an order will allocate the inventory to that order, producing the on-hand levels. The goods out note is then printed, picked, packed, and shipped. When it's shipped, items are removed from stock and accounting entries are made for cost of goods sold. Goods out notes must be processed in their entirety. You can't part ship a goods out note. However, a goods out note can be created for only part of an order, which allows you to ship part of the order now and part of it later. The goods out note is the object that's sent to a carrier integration, such as ShipStation or ShipTheory. A dropship purchase order is sent to a supplier for delivery direct to the customer. When the dropship purchase order is marked as shipped, the linked sales order lines are marked as shipped. Any tracking information added to goods out notes or purchase orders are sent back to the sales order and then back up to any integrated sales channel. Fulfilling an order updates the order's fulfillment status, similar to the allocation statuses. Every order should be closed or invoiced, even if you don't use Brightpearl for accounting. For sales and sales credits, this involves clicking the Invoice button in the UI or using the Order Close Post API. Closing the order will create an invoice number, create income or revenue accounting transactions, lock the order for editing, and optionally send a PDF to the customer. One sales order relates to one invoice. If you need to part invoice an order, you need to split it into multiple orders first. For e-commerce orders, or any other orders which are usually paid up front, the customer will have a negative balance due to the prepayment until the order is invoiced. And then when the order is invoiced, the prepayment is allocated against the invoice and the customer balance becomes zero. For B2B customers, or invoiced orders that haven't been paid, it's the other way round. When you invoice, the customer will owe you money until the invoice is paid later. For purchases, the order is closed when a supplier sends an invoice or credit note back to you. What you do is you check the value on the purchase order, match the values on the purchase invoice, and then you enter the supplier reference. Accounting entries are made, the purchase order is locked, and any assets already received are updated to the right price. You'll now have a debt to your supplier which is shown on the accounts payable screen. Unlike with sales, you can choose multiple purchase orders to match up to one purchase invoice. And in the same way as sales, if a purchase invoice relates to only some lines on the purchase order, you'll need to split the purchase order up and receive an invoice against each line. A lot of order processing can be automated using the Brightpearl automation app. Basic tasks like allocation, fulfillment, and invoicing can be done, as well as updating status or setting order field values based on rules. Most orders should be processed without any assistance, so you just need to spend your time working on the exceptions. And that takes us to the end of our foundation course on sales and purchase orders.